This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me are my two very excited colleagues, Sonia and Nigel. Guys, hi, morning.
Hi, morning.
Tell us why you guys excited.
I'm excited because it's the start of a brand new month. And this is, it's September, guys. Come
Not
on.
because it's a Friday.
He's excited because it's his birthday month, right?
Yes, that's right. Birthday month. Yeah, but hopefully by the end of September we won't be singing that song, right?
Wake me up when September ends.
Hopefully not.
Hopefully the Bulls won't sing that song.
Yeah, absolutely.
You know, Sonia, I thought you were going to say that it's a Friday. It's a Friday.
That too.
No plans.
And
that
payday. Payday has happened also.
Payday has
Nigel,
happened.
it's happened,
Yes, yeah, midday. Before expiry played out payday, you know.
So many things to be excited about, Prashant.
Absolutely. Well, you know, can we be excited about the market as well? That's the question, right? Because yesterday it was not very exciting. It was maybe on the downside. So we had a monthly negative close on the Nifty in trade yesterday, which basically means that after 4 months of positive monthly gains, we had a negative monthly close, which is not exactly a great signal. The Nifty slumped, and this is the contrast, right? The sharp divergence. The Nifty slumped in the last 30 minutes, and whereas the small cap index, took off like a rocket. The small cap index rallied 0.5% in the last 30 minutes of trade. So it's just completely two different markets depending on what you're looking at and where you got exposure, etc. So I think it's very telling. Now, overnight cues have been very tepid. It's not negative or anything of that sort, but the point is that the US market had done about 4% till day before yesterday. I'm talking about the Nasdaq, 4% since last Thursday session. Last Friday included for the US because the Jackson Hole sort of symposium happened, the Powell speech, etc. But 4%, so it was a bit of a halt last night. S&P, Nasdaq up on your screen. You had the core PCE numbers, which came in line with expectations. Now, the point is, if you look at, many people are pointing to the details within this number. For example, inflation on the services side, which, by the way, still is very strong, and services inflation is sticky. But the market paid attention to the headline core PCE number, and they said, well, this is in line, so nothing to worry about. But the point is, today we get the monthly jobs data. I think that's going to be the big one. It's a more kind of credible once a month kind of figure, and I think it's going to be important. So that's going to be tonight. Comes out around US market open. One niggling worry at the margin is that while all this is going on, one particular commodity which matters a lot for India, which is oil prices, that they continue to inch higher. They're now almost at 87, right? 87 is a lot closer to 90 than 82 or 83 where we were about 15 days back. So yeah, we've come up quite a bit, and there are some reasons there as well. We can talk about that later with Manisha. It's been, just to come back to the market here, it's been a slow-moving, kind of grinding kind of market really out there. You can look at it, I would look at it slightly still, give some benefit of doubt and say that it's not cutting through levels or anything. It's sideways, it's slow, it's grinding. So I would still be at the margin hopeful, but hope is not a sort of strategy in the market. The trend line support comes in at 19,210. So the low which the Nifty made last week was 19,230. That got broken. Intraday that got broken. We ended at 19,253. The support now, the trend line support which we've been putting out for the last 2 days is 19,210. Let's just hope that kind of holds. No sign so far that the fall in the Bank Nifty is ending either. That's been the weaker of the two indices, although yesterday the Nifty fell more than the Bank Nifty. For the Bank Nifty, we need a close above the 40-day exponential moving average, which is 44,517. And I think above that, you start to get some semblance of confidence coming back. And the low, which has not been broken in the Nifty Bank, which has been broken in the Nifty, that number is 43,600, which is not very far away. Less than 1% away. And that should not be broken on the way down. 19,210 and 43,600 in the Nifty and the Bank Nifty, respectively, are the levels one hopes will hold as we wrap up this week. The implied open is about 40 points lower. Sonia.
Okay, so as you've been pointing out, right, this market has been facing a lot of resistance at higher levels, and looks like that's something that can continue. The GIFT Nifty is not suggesting any major opening or anything. In fact, 19,450, the GIFT Nifty is now suggesting a fall of 40 points. 19,450 is the resistance that this market has been hitting for a while now. And it's in a very tight range. Give and take everything, the low has been about 19,200, the high has been 19,450. So we are stuck in a very, very tight range for the market. And within that range, there has been a lot of volatility. The US markets were under pressure overnight. In fact, in the month of August, the Dow has already lost about 2.3%. So there's been weakness across the global markets, rubbing off on our own markets as well. The non-farm payroll data is due later today, so lots of data points that will come through. The India Q1 GDP that came in was lower than the RBI's estimates, came in at 7.8%. So in that context, the macros are also not looking that great. Although there was buying by DIIs in the market yesterday, the selling pressure from FIIs continues. So there is, this feeling that perhaps the market has reached some sort of a consolidation phase and it would be tough for the markets to get above it. Couple of things to watch. The August auto sales comes out today. And in that context, don't expect any fireworks. The passenger vehicle sales, in fact, will see a modest 3% growth this time around. The small car segment demand continues to remain quite, subdued. The only pocket that has looked good is medium and heavy commercial vehicles. So in August, medium and heavy commercial vehicle sales would be up about 12%. And exports continue to be under pressure for two-wheelers. So even for Bajaj Auto, if you remember, last month was a very weak month for them in terms of export sales. And this one, that, subdued movement could continue. So all in all, lots of things to watch out for today. But the GIFT Nifty is suggesting a weak start. And that's been the case, right? I mean, it's been kind of lackluster, just ambling within this range for the market.
Well, that's right, Sonia. The month of August wasn't great. And I'll tell you what, the bulls will be looking at a close above 19,265. If that doesn't happen, then it'll be the sixth straight week that the Nifty will end lower. And this is something we haven't seen since COVID. The last time we saw this was in February, March 2020. So let's hope that doesn't happen. That's the data point with regard to the weekly close. Now, in the August series, so a big outperformance of the broader markets. The Nifty was down close to 2%. But you had both the mid-cap and the small-cap indices that did well. So you had the broader markets that outperformed the Nifty by close to around 7%. The Nifty was down close to around 400 points for the August series. And that's after gaining for four straight series. So that winning streak, so to call it, that did take a bit of a breather. What's the positioning, though, on index futures? Well, the FI gross positioning is the lightest we have seen in the last 2.5 months or thereabouts. In June 14, that was the last time we saw the gross participation. That's the long and short positions put it together. And if you look at the Nifty futures, the total open interest out there, well, that's much lighter at the start of the September series in comparison to the August series. So when we started the August series, we made this point that the index is very heavy. Now, this time around, on the index, the market-wide position is more or less in line. But on the index itself, well, on the Nifty, it's a little bit lighter than we saw at the start of last series. How the FI is positioned? Well, they're mildly net long on the index, mildly so, close to around 51% of their positions on the long side. Now, the broad range I'm looking at in the near term is around 19,000 to 19,400. And I say this because the highest open interest is at around 19,000 put on the downside. And on the upside, you have 19,400 odd. So, that's going to be an important number that we're looking at. What are the levels you're tracking then? The 20 and the 50 DMA, they become very, very important. So 19,400, 19,450, crucial data point on the upside. Well, on the downside, you're looking at 19,000. If that breaks, then the 100 DMA comes into play. And on the Nifty bank, the 100 DMA, well, that comes in at around that 44,000 odd mark. You don't want it to break that decisively, as well as the recent low. So those are the support levels. For starters, we start off on the back foot. And as I said earlier, you'll want the Nifty at least to close above the 19,265 odd mark to prevent the sixth straight week that we'll end lower.
Okay, well, lots of cues, lots of data points, which we will revisit as we kind of go along. But before we go any further, let's quickly tell you what's lined up in the first half hour of the show. We get you updates from markets across the globe. Matt Orton of Raymond James Investment will be joining in to discuss the global setup. Our research team will get you CNBC-TV18's list of stocks for the day. And at 8:30, Hemang Jani will weigh in with his stock ideas.
Okay, let's begin the day then. On the equities front, you have Chris Wood of Jefferies, who says that Jackson Hole has been navigated successfully by financial markets. If higher for longer has been the prevailing mantra of the moment, Jerome Powell delivered the message markets were hoping for, which is the Fed will proceed carefully before making any further interest rate moves. This has confirmed the base case of many market participants, including greed and fear, that the market have seen their last Fed rate hike in this cycle. I guess that's what people are hoping for, right? The last Fed rate hike.
Oh, absolutely. Well, we've probably already seen the behind of it, but we'll see. I mean, how things pan out. Many are hoping that's the case. We have views on macros from Indranil Sen Gupta of CLSA, who says they've raised FY24 GDP growth forecast by 50 basis points to 6% after first quarter GDP growth came in at 7.8%. They continue to see a shallow recovery on high real lending rates, US slowdown and poor rains. According to CLSA, beyond the base effect driven June quarter, growth should clock 5.5% in July to March 2024. They expect growth to recover to 6.5% in FY25 and then 7.5% in FY26, assuming that global economic cycle turns up by that time, which is 2025.
Okay, let's also get you some money market views. Lakshmanan V of Federal Bank says through August, the US dollar index maintained its dominance against the G7s and rupee, largely attributed to the US 10-year yield reaching more than a decadal high before cooling down. He says the focus now shifts to the US non-farm payroll and unemployment data due later today, with India's Q1 GDP coming on expected lines at a year's high of 7.8%. He expects the rupee to trade in a range of 82.38 to 83.08 to the dollar, with a positive bias for the next few trading sessions.
Okay, well, Lakshmanan weighs in on bonds as well. He says that bonds have consolidated in the 7.15 to 7.2% zone. He says fall in US yields was offset by potential impact expectations on fiscal owing to the cut in LPG prices. Well, the same range with a mild bullish bias as lower price levels should hold, and that is seeing buying interest emerging from long-term players.
Well, a lot of stock specific action to track for you. We get to that in just a bit from now in our special top 10 segment. But for the time being, let's run you through the list. We're looking at Cipla, TV18 Broadcast, Gujarat Gas, Bata, ITD Cementation, Genius Palm, and ONGC. All of them on the back of positive news flow. While on the flip side, you have Torrent Pharma, 5-Star Business Finance, and Balaji Mines that will be reacting to negative news flow.
Matt Orton is now joining us, Chief Market Strategist at Raymond James Investment. Matt, good to have you with us here. Thank you very much. I'm going to start not with the US or India, but China. So many moves, and yesterday we got more moves from the government there, basically making homes more affordable in that sense, refinancing and first homes, etc., lower rates of first homes. And that's the big problem for China, which is property market, which is such a large sort of percentage of GDP, which has been stuck for a while. Is it enough, or you think these are just baby steps and a lot more is needed? And what does it mean? What we are interested really is, what does it mean for interest into China and kind of flows rotating back into that market?
Good morning, Prashant. Great to see you again. And I don't think this is enough from China. We've seen these piecemeal moves that the government has been putting out. And really what the government needs to do is they need some sort of bazooka to actually give the market confidence that they are going to do what's necessary to provide a backstop clear against any of the potential risks that are going to come from fallout from the real estate market. We know there's issues across a number of different regions in China. And so all of these different measures that have been rolled out, Sunday night we had a number of measures. Now we're getting this coming out with respect to the real estate market. They just need to stop with these small little moves and do something larger. So from an investment perspective, I still don't like China that much. We've spoken a lot about Asia ex-China being a favored region that I like, and I think that still continues to play out. There might be a tactical trade in China, but I still think there's better opportunities to play, especially given some recent weakness in South Korea or Taiwan, looking for supply chains continuing to move away from China. Philippines, Vietnam are beneficiaries of that. And then there's India as well. India has been a direct beneficiary of a lot of the movement out of China, and also investor, I'll say, disinterest in China and finding better opportunities in a country that's continuing to grow with the larger middle class. So when I have conversations with clients, it's interesting. They're actually asking questions about emerging markets for the first time in probably 4 or 5 years. And there's a lot more interest outside of China. And I think that's going to continue. So I think you want to be investing, not chasing any moves in China, but moving into Asia ex-China. And also India continues to be a top investment pick for me in emerging markets.
Okay, that's music to the ears of all our viewers, right? India continues to be the top investment pick for a company like yours. Got that. But Matt, what about the Indian markets do you like? Is it the consumption story? Is it the comeback that we're seeing in the IT stocks? Is it the financial inclusion, theme? If you can help us with some themes that the street can look at for the rest of the calendar year.
Yeah, that's a great question, Sonia. And I think it starts with market breadth. One of the challenges for the US market earlier this year was a lack of market breadth. Sure, we had really, really strong, magnificent seven performance in some of the biggest IT or communication services names. But what I've liked about India, number one, was that valuations didn't seem extreme, but you had breadth between industrials, consumer discretionary, even though there was weakness in IT, which is a larger sector, it was offset then by strength in financials as well. And so what I still like about India, even though banks have been going through some consolidation right now, I still think there's a lot of opportunities in autos, auto components. Playing that consumption story, like you mentioned, I think is a really important theme. And also this, from what we just talked about with China, is supply chains pivot and India starts to produce more of what the world wants. The amount of infrastructure spending that's going to be necessary to build that out over multiple decades is a very, very large number. We're talking trillions of dollars. And that's really what started the big bull market from China back in the early 2000s. I think we're in early innings in India, which is why ports, infrastructure, concrete materials, a lot of those sectors I think look interesting from a long-term perspective in India. And I think that also extends globally, even in the US. I like industrials as a sector generally because you're seeing fiscal support behind it. Just like in India, you're seeing fiscal support and government commitment behind this. And I think that provides a lot of legs for that trade. And so we're very early innings. And so that's one of the key reasons why I'm optimistic going forward.
All right. Hi, Matt. Good morning. Good to see you. And Matt, what are you making of the economic data that's coming out of the United States this week? There was some kind of cooling off in data, which is good news, right? Bad data coming out of the United States. Maybe that's not such a bad thing. How do you see the trajectory with regard to the Fed from here on? We got the big non-farm payrolls data later today, but what do you expect them to do? One more hike due, or do you think they're done?
I think we're done, Nigel. I think the Fed hiking cycle is done because the economic data is coming in softer than expected. And we are in this bad news is good news mode. And that actually concerns me a little bit. I think the rally we've seen in the market post Jackson Hole was warranted because Powell basically said nothing new, which is good. He reaffirmed that rates are going to remain higher for longer and that he's data dependent. And so when the market rallied, the equity market was already oversold, treasuries were oversold. And so you've seen rates come off, equities move higher. But a big part of the moves this week have really been predicated on this bad news is good news theme. And I tell our clients, be careful what you wish for. You know, one of the biggest questions they've been asking me is, when are we done? And so I think we are done with this hiking cycle. But I think what investors in the market is underappreciating is that rates are going to remain higher for longer and that we're not going to cut interest rates next year, probably at least until the second half, and that's not priced into the market. So from a general perspective, you want to lean into higher quality companies. I think differentiation and dispersion is going to increase and become more important for picking winners and losers next year. And the rising tide is not going to lift all boats because eventually bad news is going to be bad news. With respect to later today, I think if it's a weak NFP print, the market's going to take off. But I emphasize to clients, don't chase the market higher. Pick your entry points, and there's plenty of good opportunities if you're patient and wait for it. And I think leading into cyclicals is the way to go moving forward.
Okay, pick your entry point and look for many good options, especially in the Indian market. What stayed with me is that out of all the markets that you track, India is one of your favorites. I like that. Thanks a lot for joining in, Matt. Have a great weekend. And, thanks. Hope to see you again on CNBC TV18 very soon. Okay, well, let's slip into a quick break on that note. On the other side of the break, our entire team will be with us to help us with the list of top 10 stocks. Stay tuned. Welcome back to Bazaar Morning Call. Well, this morning, the gift nifty is indicating a slightly weakish start. The Dow Jones was, ended in the red. So we had slightly weak cues from across the globe. But our research team is joining in with the list of stocks that you need to watch out for as we begin the day. First up, Ekta is joining in. She was out for a bit of she wasn't feeling too well. So Ekta, hope you're feeling much better now. Good to see you back on screen and have the best health. You're looking at Torrent, Pharma and Cipla this morning.
Well, yes, the story continues with regards to Torrent and Cipla. Thanks, Sonia, for that. We do understand from my sources at this point in time, this is a CNBC-TV18 exclusive, that Torrent has submitted a non-binding bid for Cipla, and they believe to have started financial due diligence when it comes to evaluating the Cipla deal as well. So the financial due diligence, we do understand, is currently underway. It is a part of the non-binding bid that they have signed. Now, the key question is that Torrent already has a gross debt of around 5,000 odd crores. The ticket size for Cipla, inclusive of an open offer, is extremely large, upwards of 50,000 odd crores. So how exactly is Torrent going to fund the deal? We do understand from sources that they are looking at funding options at this point in time as well. So one is that they are in talks, according to my sources, with 3 to 4 private equity players to form a possible consortium in order to fund the deal. And separately, they are also in talks with possible international institutions to finance the bid as well. Now, separately, we do understand that, there could be a final bid just in the next couple of weeks. They don't want to hold on too long in terms of a possible offer or to go either way when it comes to the Cipla deal. When it comes to Torrent and Cipla, what exactly are the synergies that Torrent is looking at, considering that it's a large ticket size, despite the fact that they've had successful transactions in India in the past? Why exactly would they be looking at Cipla? Is primarily because of the geographical access. India and their portfolio is just about a less than 5% overlap, and separately they would have access to markets such as US and South Africa. We've reached out to both parties. We're waiting for a comment from both of them.
Okay, all right. Thanks a lot for that, Ekta. Well, let's hop across to Surbi. She's here to tell us about TV18. Morning, Surbi.
Morning, Nigel. So, TV18 is on our radar today. That is because Viacom 18 has backed the 5-year deal from BCCI for digital and media rights to broadcast the cricket matches. Now, Viacom 18 will shell out just under 2,900 crore rupees for the TV rights and 3,100 crore rupees for the digital rights. It will spend a total of nearly 6,000 crore rupees for the broadcasting, The company will be paying just under 68 crore rupees per match. Viacom 18 also holds the digital rights for the IPL along with the TV and digital rights for the Women Premier League.
Okay. All right, that's something we'll keep an eye out on as markets open today. Well, 5-Star Business Finance is going to see a block. Vivek is here with details. Vivek, morning.
Well, good morning. We accessed the term sheet for this particular block deal, and we understand that a clutch of PE investors are looking to pair their stake in 5-Star Finance. The floor price for this particular block deal is kept at 725 rupees a share, slightly higher than a 6% discount to yesterday's closing price. The total size of the block is expected to be around 8.8%. Who are the selling PE investors? Matrix Partners, TPG Asia, as well as Norwest Ventures. The total size of the block would be close to 1,860 crore. Now, remember, there's a 75-day lockup for further sale of shares, and Norwest Ventures actually held around 8% stake at the end of June quarter. TPG Asia holds around 17.4% stake, and Matrix Partners close to 7.8% stake. We understand that the subscription for this particular block has been quite strong. It'll be interesting to see how the stock reacts in the session today.
Okay, thanks a lot for that, Vivek. Well, let's go across to Sonal. She's tracking a couple of stocks. There's Gujarat Gas, there's Balaji Amines. Sonal, hi, good morning.
Good morning, Sonia. Well, let me start with Gujarat Gas because the company has taken a price hike yet again in the industrial Mobi region, and this is by 2.5 rupees per SCM, which goes to 43.3 rupees per SCM. And remember, it was just 15 days back that they had taken a price hike. So it is the second price hike in a fortnight by Gujarat Gas. It is because of rising global gas prices as well. So this stock should be on our radar. For Balaji Amines, they have reported Q1 numbers. It was a weak set, something that we saw across the chemical universe. Revenues were down 31%, EBITDA down 54%. Margins have contracted by 1,000 basis points, leading to a profit decline of 54%. So that stock should see some bread today.
Okay, all right. Thanks a lot for that, Sonal. Well, Mangalam joins us to wind it down with a couple of stocks in news as well. Morning, Mangalam.
Good morning. So I have three stocks, all three green. We start with Bata. Bata has introduced a voluntary retirement scheme for all eligible employees in their South Can unit in the state of Karnataka. As the company says, the implementation of course will be mutually beneficial to both the workmen and the company. In the next quarter, perhaps we will see a one-off impact of that, but going forward, that would reduce employee costs for the company. ITD Cementation, they've won orders worth nearly 3,300 odd crores. This is a marine contract, so that should be positive for them. And finally, we have Genus Power. That stock has been on a bit of a tear, and their arm, Genus Power Infrastructures, has won orders worth nearly 2,250 odd crores. So another positive news for a stock which has already been on a serious move.
Okay, thanks a lot for that. Well, crude prices are at a 3-week high and there's lots happening over there. So let's go across to Manisha Gupta to give us the latest on that. Manisha, hi, morning.
Well, thank you for that. Yes, we have seen surge continuing in case of the crude oil prices, trading at a 3-week highs right now, but another 50 cents higher, and we would be closer to a 9-month highs for the crude prices also. So we're already trading above $87 a barrel there. It's a 6th straight day of gains. Prices have gained up by 5% on this week, and we are up between 6 to 7% for the month of August as well. It is about statements coming in from Russia and Saudi Arabia that they will be going in for deeper output cuts in the month of October. That seems to have made the sentiment quite bullish. And then you're also dealing with the U.S. crude stocks, which fell by 10 million barrels this week. Markets were working with 3.3 of a decline, and you got 10, versus that, and that has been supportive. The weak US dollar index, which is down 0.5% in this week, also has been supportive. And then the markets are looking at various China stimulus measures. That tells you that the demand could improve going forward. So all of that working in positive.
Okay, thanks a lot, Manisha, for that. Here's a quick recap, in fact, of all the stocks that we're tracking. Stocks with positive news flow, there's Cipla, TV18 Broadcast, Gujarat Gas, Bata, ITD Cementation, Genus Power, ONGC and 5-Star Business Finance, while stocks with negative news flow, Torrent Pharma and Balaji Amines. But let's also get a quick update on all the brokerage notes that are in focus for today. Vivek is here to give us the lowdown. Vivek, what are you tracking?
Well, good morning. A lot of interesting reports today, from brokerages. The one that we are tracking today is on the electronic manufacturing space. Jefferies has come out with a very interesting note. 5 stocks are in focus, while they have rating on 2. Amber Enterprises, they have a buy rating. Dixon, they have a hold rating. They also note that Syrma, Keynes and Avalon, which are recent listings, also are in focus due to the action that we are seeing in this particular EMS space. What they are saying is that the Indian EMS industry is set to reach close to $59 billion by FY26, which indicates almost a 32% CAGR from now till FY26. Also, what they're saying is that the growth in this particular space is going to be led by, number one, the China plus one trend that we are seeing, cheaper labor, as well as an under-penetration as far as the entire electronic space is concerned. Apart from that, they say that the entire space is also seeing a boost from the government focus as far as indigenization is concerned, given the recent ban on importing of laptops. The other stock on the radar is United Spirits. Macquarie has come out with an interesting note. They have gone ahead and noted the results of Pernod Ricard in India. Pernod Ricard sales suggest a 7% sales growth, whereas United Spirits managed to clock almost 21% sales growth, indicating significant market share gains for the company versus Pernod Ricard. However, the company has ceded market share as far as Radico Khaitan is concerned. Apart from that, what they're saying is that this particular market share shift has actually surprised them quite positively. However, they do see a few risks on the horizon for United Spirits. Number one, the precedents from Karnataka due to the tax increase. Also, what they're saying is that execution risk in terms of brand innovation. And lastly, inflationary pressures that are seen due to rising glass prices.
All right, Vivek, thanks very much for that interesting list. We'll revisit some of these with our market experts for views. Now, GDP for the first quarter, or the April, May, June quarter, came in at 7.8%, largely in line with CNBC-TV18 poll of 7.9%. But let's dig in a little bit more in detail. Lata is here for exactly that. Lata, morning.
You could say it's in line, but a tad disappointing perhaps, because the Reserve Bank forecast was 8%. What worked well in the GDP numbers, very strong showing by construction, coming in at 7.9%. That's largely because of state and central government capex picking up. The other sector which really contributed is finance. Finance, insurance, real estate. We know everything about banking and broking doing very well, and that's a 12.2% growth. From the expenditure side, now this is GDP from the output side. You can look at GDP from the expenditure side. And there both consumption and investment are doing reasonably well. Private final consumption expenditure up 6%. It's good because in Q4 it was only 2.8. So it's good. The expenditure is better. As well, gross fixed capital formation has come in at 7.9. Well, almost 8%. It's been having a very good run, 8, 10, 15% over the last several quarters. It has kept up its mojo. It can't go at double digits for so long, but that's a good number. What would be the negatives? The negatives, disappointments came from agriculture. It was a given that it would be much more than 4% because Rabi was good, but it's come in at only 3.5%. Manufacturing, just everyone was betting on more than 7% with all the Make in India, but it's come in only at 4.7%. So that's a bit of a disappointment. The overall economy, I just want to point out, put it on the table that the COVID weakness is not over. And I want to show that with only one item. Trade, hotels, transport, communication and broadcasting. Even our industry is included there. It's a large sector. It's about 20% of the entire GDP. That grew by 9%. But if you took the total output, it is about 6.49 lakh crore or thereabouts. It is less than what we did in 2019. Can you believe it? Before COVID, we had generated in this category 6.6 lakh crore of output. So after 4 years, this sector is still not able to come back to that level. Likewise, if you looked at the overall GDP, the overall GDP is 40.3 lakh crore. And again, in 2019 first quarter, it was about 35 lakh crore. So the growth is about 13%, which is a CAGR of 3.4. We have to look at that number. 7.8 should not blind us. If you take a CAGR from the pre-COVID quarter, we are ambling only at 3.4. We are very much COVID patients, not yet sprinting.
No, don't say that, Lata.
I mean the economy, not you and me.
No one wants to be COVID patients, I'm sure, not even the economy. Thanks a lot for joining in, but I take your point. Growth has not picked up perhaps as much as what the street was expecting. Let's take a short break. On the other side, Hemang Jani, market expert, will be joining in for a fundamental stock analysis. We'll also be joined by Gangadi Madhukar Reddy of MedPlus Health Services. There were some block deals that took place in the company. We'll find out what's happening with the business in just a bit.
Welcome back. You're tuned into Bazaar Morning Call. Well, for starters, the gift nifty suggesting we pull back a little bit. Remember, we're kicking start a new month as well as a new series. The month of August wasn't great, but we're hoping for better prospects in this month. To discuss a lot of stocks that we just told you about, we have market expert Hemang Jani, who joins us on the show. Hi, Hemang. Good morning. Thanks so much for joining in. Well, I wanted to ask you about the big deal that could be announced, the one between Cipla and possibly Torrent. Your view on the stock from here on? I mean, Cipla has seen a big run already. It's flirting with the 52-week high. How do you approach the stock from here?
Good morning, Nigel. Thanks for having me. I think there has been a buzz, that Cipla promoters are looking to exit, and some companies were there to kind of, show interest. So in terms of business synergies, there are a lot of, positives that one can really look at, given the, let's say, portfolio of Torrent Pharma versus Cipla, and the kind of business that they have in the US markets. Compared to a Torrent, it would be about 4 to 5x. Also, the kind of presence they have in certain markets like, South Africa and the WHO related product portfolio that Cipla has would make a lot of sense. So I think from a business synergy perspective, both domestic and global markets, there is a lot of synergy. But I think given the market cap and the valuation that Cipla commands, it remains to be seen as to how a Torrent or any other company will be able to fund that. Because in case of Torrent, they already are sitting on a debt of almost 5,000 crore, and Cipla is 1.3x the size of Torrent. So those are the points where we will have to have some clarity. But purely from a valuation perspective and business synergy perspective, I think it makes a lot of sense.
Okay. The other stocks I wanted to ask you about, Hemang, was what's happening with the entire banking space, right? Because in the month of August, you had a lot of banking stocks, whether it's SBI, of course, Kotak Mahindra Bank, HDFC Bank, that saw big underperformance. SBI is down about 10% in the last 1 month. Would you buy any of these names, or are you a bit cautious here?
There has been a bit of an underperformance when it comes to banking the last whole month, and more so last, let's say, few days also. Bank Nifty versus Nifty, there is clearly, underperformance which is there. Now, the point is that in terms of quarterly numbers, maybe except for SBI and a couple of banks, by and large, the numbers were good. I think what people are grappling with is the kind of over-ownership which is there across PSU and private banks. And maybe if you see some, increase in the interest rates or the compression which was there in NIMs, that could be a bit of a worry. But I don't think there is a case for a significant correction in the banking names. And I think, Sonia, when you look at the banking and NBFC, the NBFC space is actually buzzing, be it the smaller ones like Manappuram, where we saw blocks. Indiabull Housing is showing a lot of volume-based action. So the smaller ones is where there is a momentum, there's an action. But I think the larger, either private banks or PSU banks, they are in a consolidation phase. But in terms of price points, I think, it makes sense to kind of accumulate those at these levels.
Okay, I do want your thoughts on some of these, pharma companies as well, because many of them are in focus for several reasons. So I just request you to stay on for a bit. We'll come back to you. MedPlus Health is in focus. There was a large block deal, almost 13% equity changed hands at 860 rupees. Now we understand that PI Opportunities Fund and Lavender Rose were the sellers. Fidelity, the government of Singapore, Steadview Capital were a few key buyers. So let's find out what's happening there. And of course, about the business as well. Gangadi Madhukar Reddy, the MD and CEO at MedPlus Health Services, joins us now to talk about that. Mr. Reddy, good morning and thanks a lot for joining in. I just want to, check with you about these several block deals that have happened. Any indication from existing investors to sell? Any plans that existing investors have to sell? And, what could be the way forward?
So we have only 2 large PE investors who have been there with the company since 2019. One of them, PI, has been there since 2019. So this is a planned exit for these guys. They actually own a significant portion of the company between Lavender Rose, which is Warburg Pincus, and PI. They owned roughly around 32%. And as private equity funds, their thing would be to exit at, intervals, I would say, in small portions. So this is part of a planned exit. This has come nearly 2 years after we have listed. And it is just part of the overall thing. That's all.
So
the company wanted to bring in some high quality, long only kind of investors, and we kind of achieved both liquidity for our existing guys and bringing in some new solid investors.
So now, post this, sale, how much will the stake be that both these funds have, both these PE guys have, and will it be at that itself, or any more planned exits that the street should be aware of?
I'm not really privy to what they are actually thinking, but just going by what usually happens in these markets and in PE kind of holdings and all, I expect they'll hold on to their stake for a while. I see absolutely no reason why they should be exiting right now at all. And given that both their funds don't have any time constraint, I see no reason why they should be exiting anytime soon.
All right, let's talk about business then, Mr. Reddy. It's the nature of their business, right? After they make their money, after the lock-in, they'll obviously want to take some money off the table. But as you said, you're not privy to that, so we'll keep that aside. Let's talk about business then. I think you added close to around 150 stores in the first quarter. What's the store addition plan for this year? And in the first quarter, I think you grew by around late 20s. Do you expect this kind of growth momentum to continue for the year?
Absolutely. The guidance for this year was roughly around 800 stores odd. We are on track to do that. Our last 2 quarters will probably see a slightly higher number of stores coming in, but we'll probably get to that 800 number of stores very easily. On the growth itself, I see no problem at all. We'll probably continue with the same level. But the one main thing which has happened since last time I think we spoke was that MedPlus introduced a whole lot of products under the MedPlus brand name. And these are being sold at a discount of 50 to 80% discount. This we have done only in Telangana and Hyderabad, actually. Hyderabad and the rest of Telangana has seen a fantastic response from the customers. We have roughly around 50% of all therapeutic needs for a customer are now, available at this 50 to 80% discount. The plan is to extend it to 80% on all. Given the quality, given the pricing and everything else, we have seen a fantastic response. I expect this will be a big positive for us as we go forward.
Mr. Reddy, I'll stick with business, but just to rewind a little bit, the funds that have sold, would you know if the fund itself was kind of wrapping up after whatever the fund life was ending? Or you said they're selling after almost 2 years of listing. So is it a lock-in thing? Just purely a lock-in thing?
No, it is not a lock-in thing at all. Our lock-in, they could have sold any time.
Exactly.
For them, they could have sold after 6 months. But one of them had actually come into the investment only in 2021. They sold a little bit in the IPO, not much. And so then they took their time to actually, liquidate a little bit more. So given that they hold such a large portion of the company, before this, they held nearly around 32%. And eventually they have to exit. The plan for us was always to let them get an exit in small chunks, 4-5% at a time. So 4-5% both. And given that the demand out there was pretty high, we ended up actually doing a little bit more this time. But yeah, that's the plan. We will need to get them out in small portions over a period of time and bring in good quality investors as they exit.
Any particular investors who've come in that you're very excited about? I mean, any specialists in this field whose expertise, anything, the new investors who've come in, anything you can tell us about that?
No, all the 3 or 4 guys who you guys mentioned, all of them are great and quality investors out there. GIC, SteadView, then we got Nippon, and I think we have also Fidelity. Fantastic set of investors to have on board.
Okay. The stock has been under a bit of pressure lately. In the last 1 month, the stock has dropped 20%. And this entire industry is going through a bit of pressure. In fact, I wanted to talk about your diagnostics foray as well, because now you have 4 full-service centers. You have 100 plus of your own collection centers. How is it doing? Are you facing any competitive pressure? And what do you think the revenue run rate will look like in the months to come?
See, on the diagnostic side, that, as I have been saying, is a pilot. We invested around 110 crores. It's a new model, subscription-based model. everything which we thought is actually, panning out the way we actually kind of predicted to ourselves at least. The plan was a subscription-based kind of thing where we required a certain number of members out there. We have roughly around 110,000 subscribers and serving nearly 200,000 lives underneath that. So some of the memberships are family, some of them are family with a couple with one child and all that, and some of them are single. So 110,000 with 200,000 people. All of them are doing very well, I would say. And no surprise, given the fact that we give 75% discount on all radiology and all. And I'm not just counting the pathology. Pathology and biochemistry and all those other things have actually been under pressure as far as pricing is concerned because of a lot of aggregators out there. But that's not just the thing, just the blood tests around don't make a diagnostic center. We do the entire thing. And we're the only guys, I would say, who give such a large discount on radiology. And for that reason, we have seen a very good uptake by the customers. So that's on the diagnostic side.
Okay. All right. We leave it at that. Thanks a lot for joining in. Appreciate your time here on CNBC TV18. That's MedPlus talking about the large trades and the PE exits that have happened. Hemang Jani is still with us. Hemang, the thing with MedPlus is it had a very good listing in 2021, but since then the stock has not done much at all. In fact, I think it's still very close to its issue price of around 790 or 800. Why do you think that is? And for a long-term investor, is there still scope for an up move here?
Sonia, what has happened is that since we saw a good amount of comeback into the mainframe pharma companies, particularly the ones which are focusing on the US generic business or API, the money which got diverted into the ancillaries or this kind of diagnostic companies, that money has flown back into the mainframe pharma companies, and I think that's the reason why we are seeing a bit of a pause when it comes to diagnostic or even for that matter a bit of hospital space. So I think from a thematic perspective, it would make sense to have some presence as the theme or the story continues to look good. But I think given the kind of momentum that we are seeing in names like, let's say, Dr. Reddy or Cipla or even the smaller API firms, I think, outperformance is difficult, at least in the medium term for this space.
Outperformance is difficult in this space. We'll take a very quick commercial break here. But before we do that, let me quickly tell you what is lined up in the next half hour of the show. Hemang, of course, stays with us, but Anuj will be with us with a quick trade setup. That's coming up right after the break. Our technical experts will be joining in with their sort of nifty trades and individual stock calls. And our F&O expert will join in as well. And before markets open, CNBC TV18 Stock Board will highlight the top stocks which should be in action right at open. Stay with us. 12 minutes to go for the pre-open session. It's a Friday, and let's hope, things are more manageable. But yesterday was disappointing. For the large caps it was, but if you were just focused on small caps and mid caps and stocks, you were just fine. Anuj is here with a quick check on things, how he's looking at the trade setup. Anuj, morning.
Morning, Prashant. Yes, and more of the same, right? We discussed this ad nauseum. It's been a bit of a divide between the large caps and mid caps all through this month. And look at that, the Nifty is down 2.5% this month, and largely because of the bank Nifty, which is down about 3.6%. But other than that, mid cap is up 3.7%, the small cap index is up 6%, and Nifty IT, that's up about 4%. And that's something, we've been referring to for last 2 days, that from here on the Nifty, it's really the IT index which takes the lead. And my sense is that it should hit 52-week high pretty soon. There's an algo trade going on, which is to sell banks and buy IT. Normally that happens when crude's also rallying. And today we've seen the crude top the $87 mark. So I think that trade perhaps has more legs. The broader market, of course, still going strong. Some sense of euphoria, but not massive euphoria. Till the time you hit that number of stocks hitting 52-week high, that number goes to 500, you're fine. Right now, that number is 250. 250 BSE stocks are at new 52-week high. When that number starts to go to around 500, that's when I get worried. Today and Monday is going to define the near-term trend of the Nifty. Now, talking about the Nifty outlook, now I've even started to convert the charts into weekly charts because that's how the time corrections normally take place. First support is 19,223, which is yesterday's low and 10-week exponential moving average. The bigger support is 19,151, but the most important level I'm watching out for is 18,955, which is a 20-week exponential moving average. On the bank Nifty, which is the weakest component of the market, we closed just above the 20-week exponential moving average. If the market has to correct more and the bank Nifty falls more, another 1,000 points perhaps open up on the downside around the 200-day moving average of 42,900.
Okay, Anuj, thanks a lot for that. Well, moving on, Mitesh Thakkar and Shrikant Chauhan are joining in. Shrikant, of course, is the Executive Vice President at Kotak Securities. They join in now. Gentlemen, morning to both of you. Mitesh, let me begin with you. Your outlook on the index. Is there any reason for this market to move out of this very tight range? And what are you looking at on the bank Nifty as well?
Good morning. I think I'm also trying to find some reasons. The weakness in the bank Nifty is something which could weigh on the Nifty as well. But again, I think in both cases, I would want to see the downside levels being taken out. I think, the only technical reason which I can think of is the fact that every bounce from 19,200 to 50 zone has made a lower high, which is not a very positive sign. But till the price action confirms a close below 19,200, at least if not on the hourly, at least on the 2-hourly charts, then you might want to see some kind of downside opening up. But again, this still doesn't look like a downtrend. It still looks like a correction. And therefore, then we'll look at a test of around 19,000, 18,950 level, which is what Anuj just highlighted. So for the time being, keeping a close watch on 19,200, the corresponding levels on the bank Nifty is about 43,400. Till that breaks, I would not go aggressively short on the bank Nifty and see how it plays out. So trading has been more stock specific for me.
Okay, all right. Thanks for that, Mitesh. Well, let's hop across to Shrikant as well. Good morning, Shrikant. The GIFT Nifty is suggesting we like to start off closer to around 19,200. What's your view on the index from here on? How would you approach trade today?
Good morning, Nigel. Good morning, everyone. I think for Nifty, one thing is very clear that it is trading with bearish bias. Whenever it is moving upward, it is finding resistance close to 20 days simple moving average as well as 50 days simple moving average. And today also, in case if we see any rebound close to, let's say, 19,300, then there we should look for creating some short positions, because broadly we are of the view that the markets are heading lower. And in the coming times, the market may retest the levels of 19,100 or 19,050. So the strategy should be to look for creating some short position, but if there is any rebound in the market, or in case if it sustains below the mark of 19,180. For the bank Nifty, the corresponding level is close to 43,600, and below 43,600, the bank Nifty can fall to the next levels of 43,300.
Okay, what about individual stocks? Let's talk about that. Mitesh, what are you looking at this morning?
I have a mix of buy and sell calls. On the buying side is Havells, keep a stop below 1362 here. and I would look at a target of 1440 to begin with. And Atul Limited, I think I discussed the stock yesterday as well. That's a buy with a stop below 72.70, and 75.25, 75.50 is the near-term trading target which I'm looking at. And on the sell side is Canara Bank. I think after a long time, a seller on a PSU banking name. Now looks like some kind of correction is happening. So Canara Bank can be sold with a stop at 325 for targets of 308. And Petronet is a sell with a stop at 218.5 for a target of 207.
Okay, all right. And Shrikant, what about you? Some picks from your end?
Yeah, Nigel, 3 stocks on the watch list. The first one is Mahindra & Mahindra, which is very close to its breakout level. From here, the stock can move easily to the next levels of 1660 or 1700. Currently, it is around 1575, 1580. It's a great risk-reward ratio to buy at current levels with a stop loss at 1540. The other stock which we like is Reliance Industries. And if there is any rebound in the market, then I think it should be backed by Reliance Industries. It is like falling to its crucial levels of 2380, 2400. And today, if we see any quick sell-off in the first half, then close to 2400 levels, we should look for taking some contra bets with a stop loss at 2370 on the downside. The other stock on which we are bearish is Hero Motors. It is very close to its breakdown level of 2900. Below that, the stock can easily fall to the levels of 2800 or 2750. So here we can keep stop loss somewhere close to 2960 for creating short positions on Hero Motors.
All right. Thanks very much, gentlemen. Good to have both of you here with those specific trades. More in just a bit. Manoj Muralidharan, Vice President, Derivatives at Relegate Broking, is also with us. Manoj, good morning. Good to have you with us here. So, how should one trade markets, and which are the F&O stocks which are tradable?
Good morning, Prashant. Prashant, most important thing when we start a new series is just looking into the amount of positioning what the Nifty has, the Bank Nifty, and how the FI are playing at least in the new series. Now, if you see, the Nifty is lesser by 17 odd lakhs versus what we had seen in August. So we're starting the September with almost 1 crore, which used to be around 1 crore 17 odd lakhs. But the irony here is the Bank Nifty has an exceptional 4.8 to 5 odd lakhs of additional position. And we believe that this might be short overs, but the weighted average of these shorts are somewhere close to 45,000. Now, there is an interesting correlation between the Nifty and Bank Nifty. So if you simply look into the ratio, we are almost at 2.28, and that happens to be a very strong support because that is the annualized mean. So what I'm trying to say here is, even though the Bank Nifty has underperformed in the last month, almost 3.5% versus the Nifty 2.5%, there is a high probability that we might see the Bank Nifty inch more towards the 44,800. So I would take a counter bet with 43,500 as a stop loss. We'll be going long for a target of around 44,600 to 44,800. Needless to say, on the Nifty, yes, Nifty would be in a range-bound mode, but then even now, the shorting or the weighted average price of resistance would be somewhere close to 19,600. So even that gives you 150, 200 odd points. So if I see the risk-reward is more on the upside, with a 100-point stop loss, Nifty also becomes a buy, but the target would be a niche 19,600. Rather, I feel that today, after the market opens, there is high probability that the Bank Nifty might be outperforming. So we would not be shorting it. We would wait for a bounce. 44,800 to 45,000 is the level to go short. Now, I was listening to Anuj, and it was a very interesting thing that he mentioned. There is a pair trade between the IT and the bank which is going. So that is true because if you see, at least in the last 100 odd days, which is which is a quarter's time, the IT as a sector into the weightage of the entire market wide, which used to be around 4.8%, has come to 6%. So in the entire F&O basket, the IT stocks now weigh at almost 6%. And likewise, we believe cement, which is at 3%, there is more probability that we might see some buying into the September month. So we like a couple of stocks like JK Cement would be the top pick. We believe that can outperform, and we recommend buying in the cash market, not really going into the stock futures. With 30 to 90, we believe that this stock has more potential. At least 3,400 is in the offing. The stop loss of this trade should be somewhere close to 3,200. The second stock is Coal India, where we have seen good position in terms of derivative from August to September as well as cash buying. So we expect that Coal India has a potential of almost 246 to 248. 228 is where we recommend buying that. The stop loss should be close to 215 in the stock.
Okay, thanks a lot, Manoj, for that. Let's take a short break on that note. We'll come back with the pre-opening rates. Also with us, we'll have Abneesh Roy of Nuvama Institutional Equities to discuss all about Viacom 18 winning the BCCI media rights, and we'll also put focus on the below normal monsoon situation. Stay tuned. Welcome back. This is Open Exchange live from the CNBC-TV18 Motilal Oswal studio. For now, the pre-opening rates are going to kick in just a while from now. So do, keep an eye out on that. Looks like it's going to be a slightly subdued start. At least that's what the GIFT Nifty is suggesting. But there are plenty of stocks to talk about. Hemang Jani is still with us, so let's get straight to him. Hemang, the IT space, right? Mid-cap IT has been doing very well. In fact, the IT index is almost at a 52-week high as well. Your thoughts here? What would the pick of the pack be now?
Clearly, because of the kind of revival that we've seen in Nasdaq and technology stocks over there, we've seen a good amount of action in select mid-cap names. I think Coforge is something that we are seeing a good action. Apart from that, I think Emphasis is something where we have seen a fairly good outperformance. So I think, some of these names, along with the platform companies like Zomato, where you have seen a big block deal. So the overhang is over and operationally the company is doing well. So I think some of these names would continue to be in focus given the strong backdrop that we have from global markets.
All right. Just stay on. We'll come back to you in a bit. In fact, I want your thoughts on many things. There's lots of news flow actually kicking in right now. Escort sales are out and not looking that great. Total sales are down 8.5% at 5,593 units versus 6,111. Remember, for Escorts and for a couple of these other companies that are, linked to the monsoon situation, the monsoons have, there's been a little bit of a deficiency in the monsoon. In fact, a 33% deficiency is what you've seen in the rainfall in the month of August. So there has been this risk that the weak monsoons towards the fag end can perhaps hurt demand. And you're seeing some of that play out in some of these tractor makers like Escorts are not looking that great. Hemang, a quick thought here. Not just, tractors, but even some of the two-wheeler makers that have an exposure to the domestic market. Do you think this weakness in the fag end of the monsoon season is something that could impact sales?
So, Sonia, today monthly sales data will be out, and we think that there is going to be some element of surprise for the MHCV and LCV categories. So, Ashok Leyland will clearly be one of the stocks that we should be focusing upon, along with Maruti, where we expect good traction to come through. Two-wheeler, we think that things are not looking that great. Export side also things are looking quite subdued. So I think two-wheeler is something that one should avoid. In terms of tractor, I think the numbers are not good, but there is some sort of a corporate action which is playing out where, there could be some open offer by Kubota for the remaining stake which is there. So, which is why we are seeing an outperformance that has come through for Escort. So, overall, I think one will have to be a little stock specific here.
Okay, thanks a lot for joining in, Hemang. Appreciate your thoughts here. Well, moving on, Viacom 18 has bagged a 5-year deal from BCCI for digital and media rights to broadcast cricket matches. Viacom 18 will shell out just under 2,900 crore rupees for the TV rights and more than 3,100 crores for the digital rights. We'll put focus on that right now. Abneesh Roy, Executive Director at Nuvama Institutional Equities, joins us now to talk about that. Abneesh, your thoughts on this and what this would mean for the listed entities?
Yeah, thanks. We don't cover TV18, but yes, clearly 2-3 things which are emerging from this is Hotstar and Disney essentially are kind of consolidating their operations in the country. So first we saw that even in IPL, they bid only for the TV rights. And then Viacom has now got both the TV and digital rights for the BCCI. So how we see is earlier Disney Hotstar were completely dominating the cricket rights with almost IPL, BCCI, ICC. Everything was there with them at one point of time. Now it seems the big daddy for cricket rights in India will be essentially Viacom TV18. Because clearly even in IPL, which is the most attractive property currently out of the three, IPL is the most important, and then ICC and BCCI will be below that. So digital rights are with Viacom. So Viacom will do well. The issues here will be on profitability because the rights are 13% more expensive than what Hotstar Disney had paid. Second is a lot of freebies being given to the customer. So how do you convert the customer from a free customer to the essentially subscription, paid subscription? That will also something we'll watch. But clearly we are seeing much more discipline in terms of the TV rights bidding, which is, I think, a good development. And even Sony is focusing more on the non-cricket, for example, now Asian Games, etc. they'll be showing. So overall, the discipline seems to be coming, but still, I think the profitability, Viacom 18 will have to look into that.
Avnish, when Disney Hotstar had the rights, did they make money? Because as you said, I mean, for this, the asking price is about 13% higher.
So they are unlisted, but when I see their approach towards the rights, for example, even in ICC, they have sub-licensed some of the rights to Z, for example. Even in IPL, they did not bid for both. They were less aggressive. And in the latest rights which got announced yesterday, their bidding was quite on the cautious side, and their statement also is that it doesn't make sense. So clearly they are focusing on India more from a consolidation, reducing losses in cricket. So I would expect that, yes, they would not have made money in a lot of these, but being unlisted, we don't have full numbers on that.
Okay. Since you're with us, Avnish, just wanted your thoughts on, this whole monsoon situation as well. We're seeing some of these consumption players come under pressure, right? Tractor makers have reported weak numbers. The expectation is that even the two-wheeler guys that have an exposure to the rural markets will be under pressure. From your coverage universe, are you expecting any, any pressure in the listed entities because of the weakness in the monsoon?
Yes, thanks. So clearly this is a negative development. First 2 months, there was a 7% higher than the normal. And within 1 month from +7, we are now -10 for the full cumulative season. So clearly, even if now September, which is now being forecasted to be normal, I think the whole season now IMD is saying that will be below normal at around 93 to 94% of the normal. So yes, the rural recovery which had started, I think some of the green shoots which were there, I think there is a risk there. But definitely what can overcome there is the election season. We have seen 3-4 days back, the central government has put in 200 rupee subsidy for the cylinder, gas cylinder. I would expect more such programs. For example, Karnataka state election, after that, the new government, they have come out with a 50,000 crore kind of stimulus program. So yes, it's negative, but my sense is because this is lower end consumption and government is trying to help the farmer, the impact on FMCG will be a bit lower than some of the discretionary sector. So we'll be selective here. So we prefer companies where transformation is happening because of the new leadership. So Colgate and Godrej Consumer is something which we like. And second theme is clearly Dabur and Imami, where the health and immunity portfolio is coming back. And finally, ITC and Nestle, because there the rural exposure is lower. We would prefer also media companies. So PVR, Sun TV, Z, we are quite positive. And also because of the cricket, the QSRs could see some sentimental benefit, some real benefit, but not a big benefit. But yeah, QSR stocks could also do well in the near term because of the cricket season, which is coming up.
All right, I was just going to ask you about ITC, but as you have said, Avnish, that you're quite positive on ITC, though the stock is down close to 12% from the recent peak. What about Titan? There are various rumors with regard to deals on Titan, but the deal that they officially announced was on Carrot Lane. I mean, it was done at quite hefty valuations, but the street seems to have digested that. What's your view on the stock from here on?
So in Q2, if you see, one thing is that all discretionary consumption will be impacted because of the Shraddh and Adhik Maas. So to that extent, Q2 numbers will be a bit weak for a lot of the jewelry companies. But my sense is as the marriage season comes back, Titan should do well. On the Carrot Lane, clearly the acquisition is not at all expensive when seen from FY25, FY26 numbers. It makes a lot of sense. There will be synergy benefit further, more control. So I would remain positive on Titan in the discretionary space. Trent and Titan are the stocks where we are most positive. QSR is more of a tactical play just on the near term. And the dairy cost also could come down. So that will be positive for Jubilant Foods from a margin perspective also.
All right, we'll leave it at that. Avnish, thanks a lot for joining in. I appreciate your thoughts here on CNBC-TV18. Well, it's just about 9:10. Let's get a couple of, calls in now. Some stocks deserve mention, actually. The mid-cap IT names are doing pretty well. LTI Mindtree is top of the charts at the moment. And then you have a couple of other names. In the broader markets, Network 18 is up about 5.5%. Standard Disclosure, of course, they're owner of the channel that you're watching. And then, India Bulls Real Estate, Power Grid, Zomato is picking up pace, so keep an eye out on that. Mitesh is joining in. Mitesh, what's the 9-10 call?
I'll go with the buy on Havells with the stop at 1362 for targets of 1440.
Okay, that is on Havells is what you like, right? The other stock that we are looking at this morning is Interglobe Aviation. Just keep that on your radar. We are expecting some pressure on the stock on account of higher ATF prices. Now, oil marketing companies have hiked ATF prices by 14%. It now stands at a little over 1.12 lakh kiloliters in Delhi. And it's in the last 2 months alone, ATF prices have risen about, 24%. And that's the reason why you've seen the stock under pressure as well. ATF prices are now at the highest level that we've seen since December of 2022. And that's put pressure on the Interglobe Aviation stock. If you map the last 1 month of Interglobe Aviation, the stock is down about 5.5%. In fact, IIFL put out a note a couple of days ago where they said that this is a red flag for the industry, the widening of the crude jet kerosene spreads. And this may result in a double-digit percentage increase in the prices of ATF on the 1st of September. And there is a possibility that the company may report a small loss as well in the the months to come. So that's perhaps the reason why the stock is under pressure.
Interesting, Sonia, because that one's been the big outperformer, but now with these input costs going up, well, it could worry them a little bit. Well, a few stocks actually in pre-open that are doing quite well. You have TV18 Broadcast, Standard Disclosure, owner of the channel that you're currently watching. You also have a couple of other names. ITD Cementation, after that big run, it's up a good 5% odd. Mangalam joins us to talk about Imami. There's a brokerage note out there, Mangalam.
That's right. So this morning there is a brokerage note which has come in on Imami from Citi. They've upgraded the rating from neutral to buy. And the reason why they believe that is because the company will benefit from some of the strategic initiatives that they've taken around sales and distribution, tech, digital, focusing on new age channels, which is e-commerce and modern trade. And at the same time, some new product launches as well. In the near future, they expect 250 to 260 basis points margin improvement in FY24 on account of input cost moderation. And at the same time, 50% of their business comes in from, more than 50% of their business comes in from rural India. So they do believe that it is well placed to benefit from potential recovery out there as well. They've upped their target price from 455 to 600 basis 28 times FY25 earnings. But importantly, they've given a couple of risks to their call as well. The first one is delayed recovery in consumer sentiment. The second one is adverse weather impacting seasonal portfolio. So with no rains, or rather very little rains in the month of August, the question is, will one of these risks play out or not?
Well, that's going to be the one. Thanks very much, Mangalam, for that. Ekta is back with us with the Momentumizer stock of the day. Ekta, hi, morning.
Thanks for that. Well, one stock which could see further momentum, according to me, is Gland Pharma. Market cap of around 28,000 crores plus, part of the S&P BSE 200 index. Stock was up 9% yesterday. It's rallied 102% from its 52-week low of 861 odd rupees. The latest news has been positive, where the US FDA issued 2 observations to the company's Hyderabad plant for a product to be manufactured in a pen device form, which means that it's a new type of product device which they are looking to get approval for. Q1 margins also improved to 24% versus 21%. The likes of Bernstein, which is a brokerage, is positive. They have an outperform. They said that Q1 points towards early signs of revival in the base business. The stock is 33% away from its 52-week high of around 2,606 odd rupees, trading at around 29 times 1 year forward versus peak 1 year valuations of around 44 times. So that gives you some sense of the upside potential that Gland could possibly see.
All right, Ekta, thanks a lot for that. Well, let's just head into the market opening now. Mitesh is still with us, so if we have some time, we can maybe squeeze in one final question. Mitesh, anything from the IT space that catches your attention this morning? 1 or 2 stocks that you like, perhaps?
Between all the indices, Nifty IT is on a weekly breakout level. I think this 31,500, if that is captured, we'll see the Nifty IT get into some kind of an upward mode and then see further upsides. But looking at individual stocks, I think the one which catches my eye to a certain extent is Infosys. It's been making a very slow and steady movement on the upside for the last 3-4 weeks. But I think it's heading towards that 1,500 plus kind of a level, which is what it tested in the month of July.
Okay, let's head into the market opening now. We have less than a minute to go. Thanks a lot, Mitesh, for that. Have a good day. Well, for now, the index looks like it's going to open in the red, but that's not such a bad thing considering we have been in this, very tight trading range. Let's see how it goes for the rest of the day. In terms of individual stocks, once again, Adani Group stocks seem like they could be under pressure. Adani Enterprises, Adani Ports, down about 1.5 to 2%. And then you have names like Infosys as well. So here's the first tick on the index. It's absolutely flat, so not doing too much at all. Nifty is up about 16 points, sensex up 30 points. In terms of individual stocks, there is Hindalco, Tech Mahindra, Coal India, Tata Steel, Power Grid that are topping the charts. By the way, those are Bajaj Auto sales, better than what Nomura was estimating. So total sales at 3.41 lakhs, but that is still a fall of 15%. Remember, last month as well, the Bajaj Auto sales were down 10%. This month as well, down 15%. Would be interested to see what the export numbers are because that's where all the pressure has kicked in the last couple of months. So total sales for Bajaj Auto down 15% year on year. And then, of course, in the domestic market, there's that weakness in the monsoons. We'll come to that in a bit. For now, the stock is doing fine. Eicher Motors, HCL Tech, Apollo Hospitals, SBI are a couple of other stocks that do deserve mention. On the downside, though, you have NTPC, that's down about 1.5%. There is Infosys, there's HDFC Life, ICICI Bank, Maruti Suzuki, and Grasim that are under pressure now as we speak. So it's flat. But the Bank Nifty once again dragging. Anything else?
Well, that's right, Sonia. In terms of stocks that are losing out, Five-Star Finance, demand we understand is quite high for that block. But that stock, in fact, is open up with a cut of around 3.5%. HDFC AMC, well, that's down close to 3.5%. IDFC First Bank as well. Some of these in the last hour of trade, they saw a sharp spike because there was an MSCI rejig that took place. But for the starters, at least, they are pulling back a little bit. Stocks that are gaining on the back of order wins. We just had a big order that was announced by NCC. So that's opened up with a gain of close to 3%. ITD Cementation. I recall interviewing the management at their office, their head office here in Mumbai. And the stock was half this price. The stock today is up close to around 8% odd. It's flying away they promised, and it appears that they delivered what the street expected. Genus Power, well, the stock is locked in upper circuit. It's up close to around 5%. Last few sessions have been good. A 2,000 crore order is what they want. The street likes that. Gujarat Gas, there's a rate increase, a price increase upwards, so that stock as well is higher. On the downside, you have Escorts. The numbers just came out, and it seems the street didn't like it too much because that one as well has pulled back a little bit. But contrary to what we saw on the GIFT Nifty, it was suggesting a downtick of 40 points. Well, we're up close to 50 points, holding around 19,300. Prashant.
Okay, well, yeah, absolutely. 46 points, almost 50 points higher on the Nifty is what we have. Just a few other names in terms of specific stocks. Indiabulls Housing Finance did sell off a little bit yesterday, but is back up about 2.5%. Stocks at about 203, 204 right now. There is, ITD, Nigel mentioned, 10% now, so it's a big mover. Mazgaon Dock is up 3%, 1,900 plus. And again, very large volumes on Mazgaon Dock coming through. Jupiter Wagons is a company we had on the program yesterday. That is coming up with large volumes. It's up another 5% this morning. There is TV18 Broadcast. We were just discussing this with Abnish, the analyst, 5% higher there. Gland is a stock that Ekta put out on Momentumizer. Gland is up 2.5%, so 1785. Coming up with decent volumes here as well. Amber Enterprises, again, something which we put out earlier. I think Vivek had highlighted that 5.5% on Amber, 3,056. That's a big mover. Electra Green Tech, I think they were towards in the dying few minutes yesterday. There was some news coming through on Electra. 1.5 higher, 1266 on that one. Kalyan Jewelers went up 10% yesterday. There is some follow through. I mean, it's opening up about 2.5% higher, so worth watching this one. Network 18, along with TV18, Network 18 is the one which is up more, 7% on Network 18. At this point in time. The listing from yesterday, Aeroflex, which had a very good day, is starting about 2% higher once again. And you got names like RK Forging. RK Forging, I think, was up in double digits yesterday. It's up another 3% this morning. MedPlus, we had the company with us earlier this morning. After that block, it's up 1.5, so slow start, but higher. Supreme spiked up in the last 30 minutes of trade. Supreme Industries, that is, it's up 1% or so. So many names coming through. Atul Auto was another 10% mover yesterday. It's up another 3.5% this morning, 6.5 odd. sorry, 611, and you've got something like a Nazara Tech, which is up about 2.5% also. So that is coming up at about 796. So that's, a list of what's happening and what's going on across the board. BSC has had a fantastic one-way rise, and that's pulling back a little bit, just a tad bit, 2.5% down on BSC Limited at this point in time. Well, Nilesh Shah is joining us now. He's Managing Director at Kotak Mahindra Asset Management Company. Nilesh Bhai, good morning. Great to have you with us here. Appreciate your time as always here on CNBC TV18. We were just jokingly saying that it's almost a daily 0.5% kind of compounding for small caps. And it would be true because it is true. Our colleague Sudarshan has put out an article where he went back 20 years and looked at the divergence between small caps, actually mid caps and Nifty. And he found that we are kind of set to have the biggest outperformance for mid caps vis-a-vis Nifty going back 20 years. So just wanted to get your thoughts to begin with there. Go on.
So Prashant, when making money is so easy, there is a risk ahead. As of today, as we speak, micro cap and mini cap as a percentage of total market cap is higher than 2007-11. We all know what happened after 2007 highs. I think today there is a herd mentality. People are buying micro caps, mini caps based on momentum, not based on fundamentals. Now, there is always exception to rule. So some of the micro caps, mini caps probably are reflecting their fundamental values. But when we look at them as a percentage of market cap, as a percentage of large cap valuation, as a percentage of their own historical average valuation, clearly there is a red signal. No one knows when the momentum ends, but everyone knows that if you buy without margin of safety, then you will have to hold these stocks for a long period of time to make money.
Okay, by the way, the market is picking up pace. So, the index itself is up about 45 odd points. It's trying its best to break out of that range at the moment. Yeah.
No, sorry. I just want to kind of,
sure.
press on that point because those are very strong, clear kind of words coming in from, Nilesh. So basically saying that people are buying micro caps, mini caps based on momentum and as a percentage of, you could look at a variety of things as a percentage of overall market cap, as a percentage of large caps, as a percentage of their own historical valuations. You are at highs basically. So how are you kind of approaching the market? It's, to be able to sit out while everyone around you is making money, that is perhaps the most difficult thing in investing, right?
Yes,
it is the
sure.
most difficult thing, right? So is it time to do that?
No, of course it is very, very difficult, Prashant. But I have a very simple benchmark for market behavior. When I go to party and everyone shuns me as if, I don't exist, that's the bottom of the market. And when my cousins and relatives start telling me, Nilesh bhai, ye kharid lo, tomorrow that's going to go up. And when that starts happening, I know somewhere I need to be cautious. This is the time where I will prefer caution over making money. There are enough opportunities in large and mid cap. Of course, by not going into micro cap, mini caps, we may lose some performance, but that's fine. We have clientele base who will be able to appreciate that. And our focus right now is on valuation. We want to buy real businesses, whether it's bear market or bull market, but we don't want to overpay on valuation. It obviously results into underperformance in a phase like this, but we are fine with it.
Okay, well, I don't think the time has come just yet. We also go through that, right? When in phases, when there's a lot of euphoria, then you get everyone from your driver to your watchman to your staff at home asking you what stock to buy and sell. I haven't faced that just yet, so perhaps it's not a euphoric time in the market, even in the broader markets. But Nilesh, great speaking to you. Good to see you after a while. A lot of spaces have come back after a big lull, right? Whether it is capital goods, infrastructure names, real estate. I'm seeing BHEL top the charts after so many years. How are you feeling about that? Do you think this is the start of some sort of a big Capex, multi-year Capex cycle? And if yes, are these the spaces to look at?
Undoubtedly. There is a Capex led by first central government, now state governments have joined in the party. And private Capex led by large industrial houses is on the way up. We believe as capacity utilization starts improving, and in yesterday's first quarter GDP data, we did see some amount of recovery on private Capex. Hopefully, all this will result into some amount of revival in order book and some amount of growth. The second biggest opportunity which is emerging is China plus one. Global supply chains are shifting their outsourcing. And many of the Indian companies, especially multinational subsidiaries, they are getting bigger share out of their parents' purchases. Combination of global market plus local market bodes well for capital goods and infrastructure companies. Probably from here till May 24, government will push on faster execution. They were already running at a good pace, but last 100 meters, they'll put extra effort. And that bodes well for the conversion of order into turnover and profitability for capital goods and engineering companies.
Hi Nilesh, good morning. Well, keeping my SIPs going as I always promise you. But what are you making of these PE exits? Large PE exits almost on a weekly basis, and it's being lapped up. Do you think that it's a cause to worry? Who do you think is getting a better bargain out here, or are both gaining? One has made its money, and one is playing for a longer term.
So private equity players have a fixed tenure for their fund, and they have to exit as those funds come for maturity. What will be a better day than today to exit? Now, investors who are giving exit to private equity guys, they are taking a longer term call, and they are probably picking up those stocks at valuations which they find reasonable. Do remember that not all the PEs are able to get exit. There were a couple of IPOs where they tested out the market at the valuation which they wanted. And I believe so far they have not been successful. One good discipline of this market, and where it's difficult to say it is the top of the market, is absence of a large overvalued IPO. So far, whatever IPOs have come are of reasonable quality and reasonable valuation. We haven't seen a large IPO which creates fancy euphoria at an extreme overvaluation. And hence, maybe it's too early to say it is top of the market.
Got that. Maybe, I think there was that ARM, which is the microprocessor semiconductor company, which is coming up with an IPO, some $90-100 billion. I don't know if a global IPO will do. But that's something to watch. But Nilesh, just to take you back to what you started by saying, right? I mean, absolutely take your point. Time to exercise caution rather than kind of chase momentum. I mean, don't do that. And that is absolutely sound advice. But are the fundamental underpinnings looking pretty strong? I mean, there is, so if you just step back, banking is a sector that's been sort of cleaned up. People are worrying about the next cycle, and that we don't know, but there was a big cleanup. Real estate, largely, I mean, demand is picked up, inventories getting depleted. So overall, are things looking, are the underpinnings strong? Valuation excesses can be there, but there's nothing wrong otherwise. Would you agree with that, Nilesh?
Absolutely, Prashant. This has been a fantastic convergence of growth. Our earnings growth will be superior to our peer group in emerging market. Our governance standards are far, far superior to emerging markets and comparable to developed markets. The regulatory framework, which our exchanges and SEBI kind of regulatory authorities have set up, that provides a lot of leeway to minority shareholders. And more importantly, Indian economy is transiting by a green transformation. We are the lowest per capita emitter of carbon in the world. We are on our way to meet COP26 targets, and we produce more than 20% of our energy through renewable energy. Where in the world will investor get convergence of 3G, growth, governance, and green? And to some extent, we are seeing Birbal ki kahani in our market. Our growth story was good, but others have started scoring self-goal. Russia knocked itself out of investor radar by Ukraine invasion. China is struggling with property bubble and also their crackdown on entrepreneurship, especially technology sector. South Africa, Brazil, Turkey, they all have scored different kind of self-quotes. Suddenly, the universe available for emerging market investors, everyone else is scoring self-quotes and India is doing well. So we look better and brighter compared to others even more. Put together these two things, fundamentals are good, others are scoring self-quotes. Effectively, there's not many options for an emerging market investor but to invest in India. And now I think people are convincing themselves, what's the worst case about India? I won't make any return for 6 months or 12 months. So be it. I'm here for 5 years, 10 years. I will stay invested. As the boardroom started talking about foreign direct investment in India, their pension funds are following. So we are seeing a fair amount of flow coming in from a long-term conviction, especially keeping in mind that other options are becoming dull.
And that is, I guess, one more reason why one should not unnecessarily chase momentum and then get stuck in things and then you're trying to recover money while, the rest of the market kind of moves on, right? Because that is opportunity cost.
Absolutely. Margin of safety is the principle which one should follow in this kind of market. It's better to lose some upside than to create bigger downside.
Okay, Nilesh, before we let you go, I just wanted your thoughts on some of these auto companies, right? Bajaj Auto just reported their numbers a while back. And, these companies, the traditional auto guys, have been struggling for a while now. I mean, if you look at Bajaj Auto's numbers, 15% fall in overall sales, domestic sales down 20%, exports down 6%. So there's not just competition, but now competition from a lot of new emerging electric vehicle players as well. What do you do at a time like this? Since you're looking 5-10 years down the line, do you think these are companies that will continue to underperform, perhaps struggle to stay relevant? Or would you continue to back these guys?
So, Sonia, if I give an example from our industry, in the broking company, when online broking came, traditional brokers were able to adopt to online. In fact, they led online broking. But eventually, when low-cost or zero-cost broking came, online broking companies were not able to match it. And today, leadership has transited from traditional broking company, mom-and-pop shops, brick-and-mortar shops, to low-cost, zero-cost online broking company. Today, market is fearing about the same thing on the automobile sector. Will ICE makers be able to move to hybrid stroke electric vehicle or to maybe hydrogen fuel cell if that is the future? Now, every company is making an attempt, but clearly the new age companies, the startups, they have far bigger advantage because they are starting on a clean slate. The traditional companies, they are making money on their ICE business and they have to jump to catch the electric business. In this transition, market is trying to figure out who will be the winners. Obviously, the companies which can make that transition, that will reward shareholders. Market will also increase their valuation. But we have seen that the transition is not easy. More importantly, two-wheelers per se have also been hit by uneven recovery in Indian economy. First quarter GDP numbers showed some improvement in private consumption. It is still subdued, but at least it is now turning positive into bigger territory. My feeling is that from here till election, as more money comes into the pockets of consumers through government spending, we will see demand pick up in two-wheelers. Now, this trend should have happened, but we are unfortunately seeing a deficient monsoon, which could have material impact on rural income. Now, again, we are in dilemma. Will the money in the hands of consumers ahead of election be outnumbered by deficient monsoon? So there are reasonable doubts emerging on the demand in two-wheelers in the near term and transition in the longer term from ICE to hybrid EV. These are not easy questions to answer, and which is why market is waiting and watching, and this company's valuations have been derated.
Okay, all right. We will let you go on that note. Thanks a lot for joining in. Have a great weekend and hope to speak to you at length again very soon, Nilesh. Thanks a lot for being with us. Well, let's do one thing. Let us get our focus on the auto sector now. By the way, the Nifty is back above 19,300, so 50 points in the green. M&M is one stock that has been surging now, and it's at a fresh high this morning. M&M up almost about 2 odd percent. It's been a relentless run on the upside for stocks like M&M, and once again making its presence felt. But Bajaj Auto is the other one. The weakness continues in the month of August. The total August sales have come in with a drop of 15% at 3.41 lakh units. Nomura's estimate was 3.30 lakh units, so it's slightly better than the estimates, but it's still a steep fall. Domestic sales are down 20%. Exports are under pressure as well. Exports are down almost about 6 odd percent. So let's get the management on board. Rakesh Sharma is joining in to give us a view on what's happening. Rakesh, thanks a lot for joining in. Before I ask you about exports, what's happening in the domestic market now? Because, the festive season has begun with the onset of Onam. How have the festive sales been? And given the fact that there is this deficiency of monsoon, right, in the latter half, we saw almost a 33% deficiency in the rainfall in August. Do you think that could put some pressure on the domestic sales?
Good morning, Sonia. The motorcycle industry in domestic is showing steady increase. It's not rocketing up, but after, successive quarters of double-digit decline, it sort of evened off in Q1. And what we are seeing in retail terms, it's now at about 4 to 5% growth over the same period last year. We expect that this should obviously, with the festive kicking in, should probably go up to 5 to 8%. So nothing dramatic, but it's good to be in the positive zone. Now, the character of this growth is such that it's being driven by the top half of the industry, which is slightly more than the 5 to 8%. And the bottom half is sort of almost at zero.
So what does this mean in terms of domestic sales? I mean, this time domestic sales were down 20% compared to what we saw last year. And the wholesales have come in a little above 2 lakhs. On an average, what do you think domestic sales could look like over the next couple of months?
Looking at our sales numbers, it would not be right to just compare them with last year, as it was not right to compare them with last year in Q1. Because, if you recall, we had a major supply chain issue in the first 3-4 months of last year. And therefore, you were seeing humongous growth in Q1. But last year, from August onwards, we had started to build up stock. So the right way to look at it is really the retail growth, which is very, very easily available on Vahan. Now, if you see Vahan data for this year and even for August, you will see that the motorcycle industry is growing at year to date at about 4%, and our retail growth is 19%. So actually, if you go beyond just the first page, it's a very, very robust performance by the domestic motorcycles and three-wheeler business. Very robust.
Okay, Mr. Sharma, hi, good morning. Just a quick word on the poor rains we have seen in the month of August, and the forecast for September is also pretty poor. Is that going to hurt at the margin? What's the assessment?
In terms of growth, the broader economic recovery is set in motion. And the poor rains will only dampen the growth, but I don't think it will result in a decline or anything. And that's the reason why one is saying is that the retail growth outlook is probably 5 to 8%, depending on the segment. But yes, if the monsoons had been absolutely perfect, we could have probably hoped for slightly more. However, like I said, economic recovery is now reaching the pockets of our kind of customers, and we are happy about it.
Okay. I wanted to ask you, given the strong demand of the Triumph, what kind of production ramp-up can we expect in the Triumph by the end of FY24? And what is the order backlog that you're seeing for the Triumph right now? What kind of scale-up can we expect in production?
Yes, unfortunately, there is a considerable backlog. We are over 20,000 units of bookings. And last month, which is in August, our dispatches were about 3,500 units. We're going to scale it up to about 5,000 in the coming months, and then try to see if we can go up to 7.5 in the final quarter. We are taking this step by step, but because it's not just about the production, we have also started to establish an absolutely exclusive channel for Triumph. So we started with about 14 stores in July, which has now gone up to about 25, and which will now progressively go up to 50. So the other thing is that these 20,000 bookings are only from these 15 centers. And our whole attempt is to deliver a very distinctive retail experience and ownership experience to the customer. So we are taking it step by step.
Okay.
By the way, Sonia, today, I think in about half an hour, Eicher will unveil their Bullet Refresh, which is under 2 lakh rupee bike. But we don't know. I mean, I don't know if there's a fresh pricing or something. But it's Mr. Lal is there in Chennai. I mean,
Yes,
you heard from him
yes.
yesterday. So yeah.
And he was talking about how he's not in a hurry to unveil his electric vehicle. Yeah, but it's coming. It's coming in 2025. So that market is also hotting up, right? The EV two-wheeler space. But Mr. Sharma, tell us about exports, because despite your assessment of things improving July onwards, it hasn't really panned out as expected. How is Nigeria doing at the moment? And has the recovery played through in its entirety? What is the expectation as we move along?
Well, it is improving. If you see, quarter 4 was 115,000 units. Quarter 1 was 125,000 units on the average. And quarter 2 is running at about 140,000 units on the average. I mean, we never expected a rocket-like recovery. It's a very difficult situation in the overseas markets because of the macroeconomic factors, largely led by the volatility of the forex, which has led to inflation, availability of dollars for trade, etc. However, having said all that, there is a nice 5 to 10% recovery almost every quarter, both in retail terms and in shipment terms now. And I think that is the way it will go. I'm not expecting a sudden return to 200,000 within a quarter or so.
By the way, do you have any exposure, Mr. Sharma, since you brought up Africa, to Gabon, where we've seen a military coup recently?
No, we don't have any issues. And just to sort of complete Sonia's question, I'm sorry I did not respond on Nigeria. Nigeria is taking a little bit, Nigeria is improving by about 5% every month in terms of retail. And the stabilization of the currency is still an issue. Locally in Nigeria, it's still wobbly because they're attempting a very major thing, which is convergence of, the street market with the bank, the street rates with the bank rates, and having one window for foreign exchange clearance. There are major reforms, and they are taking a little longer to sort of play out. And so therefore the recovery is slightly less than expected. However, it is at about 5% per month. If I look at our retails in August, they were 5% better than in July, and so also in July.
And how has the feedback been for the new EV three-wheeler? Which markets have you been targeting for that, and what is the expectation?
Sonia, it's been an outstanding feedback, and we are glad that we sort of went back to the drawing board and sort of delayed our launch. And within the first 45 days, in registration terms, we have zoomed to a 56, 57% share. Of course, we will not be satisfied with less than 80% because we have 80% of the three-wheeler business. And now, by end of this month, from about 2 markets in August, we will be in 18 markets by October. So the ramp-up phase is going to start in September. And the reception which we have received in the first 2 markets, if that plays out, then we would be very, very delighted by that.
So, sorry, I didn't get that. What is the ramp-up plans for the EV three-wheeler?
The ramp-up plan is that we will go from 2 cities to 18 cities now.
Okay. No, in terms of production?
We'll see how it goes. And our first objective is to establish the network, get the mechanics, everything trained up, etc. And because a lot of this business is actually conversion of those e-rigs, which were, which have proliferated because there was permits in the auto side and there were no permits on the e-rig side. And they were really not a very lasting solution. So, so now, if you look at it nationally, nationally they constitute about 50%. So if ICE autos are 50,000 units, these e-rigs are 40,000 units. So I would say that over the midterm, that's the kind of business which we are shooting for.
Okay, all the best. Thanks a lot for joining in. Appreciate your thoughts here on CNBC TV18. That's Bajaj Auto talking about the way forward for the business. They're looking at about a 5 to 8% growth in the retail segment in the festive season. It's still going to be low single-digit growth according to them. And the bottom end, that is the mass market segment, is absolutely flat, so no great growth there. Let's step into a quick break. On the other side, Praveer Sinha of Tata Power will be joining in to talk about its pact with Sanyo Special Steel, as they will be setting up a captive solar plant. Later, we'll connect with Prashant Bindal of the Lodha Group to discuss demand trends in Mumbai's residential space. Stay tuned.
Welcome back. This is Corporate Radar. Well, the markets are holding strong. They're up close to around 70 points out. So it's been a good start to the September series. But let's get straight to a big CNBC TV18 exclusive then. Zerodha founder Nikhil Kamath is looking to up his stake in Nazara Tech. Sonia is the one who's bringing us all these details. Sonia, what are you picking up from your sources?
So it's very interesting, right? The entire gaming space is something that has picked up quite a bit, and Zerodha promoter Nikhil Kamath is interested to pick up more stake, additional stake in Nazara Tech. This is what we learned from our sources. Now, Nikhil is looking to buy a total of 3.5% stake in Nazara Tech in his personal capacity. And so far, we understand that he has bought up to 1% stake already. Talks are on to increase stake further, although the deal has not closed just yet. But over the next couple of days is when we're expecting the deal to close. Remember, Nazara Tech has a board meeting on the 4th of September, and we reached out to Nazara Tech as well. They say they don't want to comment on market speculation, but they have talked about some fundraising too. So in all likelihood, this deal will go through over the next couple of days. Now, apart from Nazara Tech, Nikhil Kamath has his sights on a couple of other gaming companies as well. The deals have not closed just yet, but the overarching theme is the growing gaming industry and the interest that he has there in his personal capacity. He's looking at a few gaming companies both in India as well as overseas. If you look at the Nazara Tech stock, right, it's had a very strong run in the last many months. So the stock is up almost 50% in the last 6 months alone. The gaming industry has been growing quite a bit. So in Q1 alone, Nazara Tech saw its revenues go up 24% in the gaming business. In the esports business, which is the next big vertical for them, which is growing, that's seen a growth of about 15.5%. Only ad tech is slowing down a bit. So, but gaming and esports are two verticals which have seen a very sharp run up. So, that's the news flow. We reached out to both parties. Nazara Tech, of course, does not want to comment on any of the speculation.
All right, big name coming into Nazara, and that explains why the stock is now moving higher as we speak on the back of that big exclusive. Just take a look at it. Spiking up. It's already gained a goodish bit, but now it's moving back to the high point of the day. Well, let's focus on Tata Power. As promised, well, the company has has partnered with Sanyo Special Steel Manufacturing to set up a 28 megawatt AC captive solar plant here in Maharashtra. To help us out with details on that and a whole host of other issues, we have Mr. Praveer Sinha, the Managing Director and Chief Executive Officer, who joins us on the show. Hi, Mr. Sinha. Good to see you, and thanks so much for joining here on CNBC TV18. Well, let's start off by talking about the Capex targeted on the charging infra. What is the return on the investment here? And what is the timeline that you've planned for increased chargers on road?
Good morning. Thank you for having me on the show. In EV charging, there are three components. First is the home charging, where we make a good margin because it's on a cost plus basis that we do. And for providing the EV charger as well as the services. There is a fee that we charge. And that's one part of the business which is profitable. The second part of the business is the fleet charging that we do and also the bus charging. There again, it is on a cost plus basis and there is a good return that we get on these. The only space where the returns have not come as yet is the public charging, which is not a very large component. At present, we are having nearly 5,000 EV chargers, which are public chargers on highways and cities. That's where the utilization factor is still very low. It's about 2%. We do expect now that the range anxiety which people used to have is no more there, and people are now seeing that you have charger availabilities even on highways, even in different cities. So I do get a lot of calls saying that, yes, we went to this place and people travel from Delhi to Chandigarh or Delhi to Jammu or Delhi to Nainital or Dehradun, and they get chargers right across, also in south and west of India. So I think out of the 500 highways, we are there on nearly 350 plus highways. So I think once the charger utilization increases and the penetration of electric vehicle increases, we'll start making returns on that. But this is an area where we have to be present to ensure that the whole EV ecosystem becomes very strong.
Mr. Sinha, good morning. You know, it's a long-term story, right? I mean, electric vehicles, electrification of automobiles. How large can this business be for Tata Power? Can this be a very meaningful business? Very large in size. I mean, any broad numbers you can share with us, sir?
See, now you need to look at it not as standalone businesses in silos, but also in the energy services business, which Tata Power is working on. And we now provide end-to-end customer solutions, which is rooftop solar, energy management, energy services as such, EV charging, distribution services. So I think we need to look at it that in totality, I'm supplying and servicing the consumer for their total electrification requirement. And this is a very, very important component when we talk about decentralized generation and decentralized usage of energy by the consumers. So I think we need to look at it and how each one of them will hold the other and thereby build the stickiness in the business. And that's what is important. So you need to look at it in totality rather than looking at them as a piecemeal service.
So in totality, how large can this business be? Energy services, as you called it.
So like today, we have 50,000 home chargers. I expect in next 5 years, this will become more than 500,000 home chargers. Similarly, there are now 7 cities in which we have EV charging for buses. It's increasing tremendously. Now, recently, the bid for 5,000 buses in different cities have been found that we are virtually doing everywhere. It's in Srinagar, it's in Jammu, it's in Calcutta, it's in Delhi. So every city now is going for EV buses, and this is becoming a reality with the support from the government. So I think this is a huge business which will grow in the next couple of years with more and more EV penetration that will happen. Similarly, battery swapping is becoming a very large business. And for both 2 and 3-wheelers, we are working with many of the OEMs to see that how these battery swapping stations takes place, and we provide them the support in terms of the EV charging infrastructure. So I think the market has just started its tip of the iceberg, but going forward, this will be a huge business for Tata Power.
All right, Mr. Sinha, so we got that out of the way. Let's focus on the renewable energy part of your business. What kind of addition are you looking at in the renewable energy vertical? Could it be, 2 gigawatts per year? What kind of Capex will you have? And ultimately, what are the returns you see out there?
So right now, we have 4 gigawatt of existing operational assets of renewable, nearly 3 gigawatt of solar and 1 of wind. We have a pipeline of nearly 4 gigawatt, which is there Some of it is, of course, third-party EPC, but nearly 2 gigawatt is our own in-house projects, which we develop as utility scale. Also, what we are seeing is that there is a huge push on group captive projects, and large number of industries are coming forward. A few months back, we signed the agreement with Tata Steel for nearly 1,000 megawatt of hybrid project. We have since then signed with many industries in the country, and there are many in the pipeline. And we expect that every year we will be adding about 2 to 2.5 gigawatt of capacity, either through the group captive route or through the utility scale. So I think we'll have a very good portfolio mix of these type of projects. And this year we have a Capex plan of nearly 8,000 crores in renewable out of the total 12,000 crores in Tata Power. So I think we are all geared up for the growth that we are looking. But yes, we have always been conscious that our growth will be very, very calibrated, so that the type of returns that we expect comes from a mix of both utility scale as well as the group captive projects.
Okay, so utilities and group captive projects, it'll be a mix of that. But can you tell us in general, how is the power demand trending like in FY24? What kind of growth are you looking at? And what is the, blended PLFs at the moment, and what is the expectation as we move along?
So last 1 month, I would say that the power demand has gone up, which we were at around 215 to 220 gigawatt, is now 230 gigawatt plus. In fact, last few days, it has gone to 234 and 235 gigawatt. So there is a huge demand. The monsoons have got the second phase of the monsoon is going slow, and because of that, there is a lot of humidity and a lot of requirement of power that we see. And we expect that if the monsoon does not improve, then this demand will definitely continue up to end October. And you can see the exchange prices also going up. In fact, both in morning and evening, it is peaking at 10 rupees. So I think there is a very good demand. Overall, we saw in the earlier months, we didn't have that sort of demand, but now it has picked up. And I do expect a 5 to 6% growth on an annualized basis.
Mr. Sinha, is this what we're seeing over the last couple of weeks, peak deficits, etc., demand at all-time highs? Is there also a one-off-ish kind of element? I understand there was a nuclear power plant which was undergoing maintenance, etc. Once that is back on stream, that perhaps will, or is this more structural? I mean, you see this, staying like this, very high demand, because on the thermal side, not very much capacity has come on stream. New capacity has come on stream over the last many years now. We recently heard NTPC coming up with an announcement to invest 15,000 crores into a new large thermal power plant. So just wanted your thoughts there.
This is a demand growth that we have seen. Last year, the demand growth was nearly 10%. So prior to that, we were somewhere at the peak demand of 180 gigawatt. Last year, we came to 210. And this year we are at 230 plus. So I think the demand growth has been there. Basically, we have seen that there is a huge consumption right across, whether it is in industries, commercial or residential. And with the weather sometimes not being as predicted, the demand goes up because there is more of agriculture requirement as well as the commercial and the residential requirement. So I think the demand is going to stay over here. It is only going to increase. A lot of capacity additions, especially in the renewable, which got delayed last year because of the supply challenges from China. I think this year it is sorted out, and you will see that in next 12 to 18 months, a lot of capacity addition will happen in the renewable space. Some of the other areas, the conventional generation, has been going slow because as a country, we took a stand that we will be 500 gigawatt by 2030, 300 capacity has to be added in next 7 years. So I think there is a whole lot of action that is taking place, both by the industry as well as by the government and regulatory system. And we'll start seeing good results in next 12 to 18 months.
All right, we'll leave it at that, sir. Thanks a lot for joining in and have a great weekend. Thanks for joining us. That's Tata Power. By the way, let's move on to the real estate space because there's lots happening there as well. Mumbai has recorded over 10,550 property registrations in the month of August. This was the decadal best number which the city has witnessed, and it's a 22% increase on a year-on-year basis and a 3% increase on a month-on-month basis. Who's buying all these flats? Let's find out more. To discuss demand trends, Prashant Bindal, the Chief Sales Officer at Lodha, joins us now. Prashant, thanks a lot for joining us. You know, it's clearly heydays for the real estate sector, right? But I just want to understand from you, in the Mumbai market, you have, there are, of course, premium properties, there are regular ones as well. Which ones are selling more and what is the trend looking like over the next 12 to 18 months?
You see, if you see, Sonia, the structural change that happened in real estate industry, we have been observing for last 10 quarters. And every month of every year is always the best year. That is how it has been happening. So the trends are, you see, and it is reflected in the sense that the growth is happening across the segments, whether it's affordable, the aspirational, the premium, as well as even in luxury. You know, in Bombay context, the affordable segment is up to crore. The aspirational segment from 1 crore to 3 crore, and premium is 3 crore to 15 crores, and luxury 15 crore and above. In all those segments, the growth is almost similar. Yes, it has been led more by the aspirational segment. The 1 crore to 3 crore segment is doing well, but the premium and you know, it is the continuation of what we have seen in last three odd years or 10 quarters, and we believe that will continue to happen because the growth is more structural, because when it happens all across geographies and across price segments, barring the 50 lakh and below segment, I think the growth is across the segments.
Growth across the segments. Interesting. Hi, Prashant. Good morning. Nigel on this side. Well, will quarter 2 be better than quarter 1? And also, if you could tell us, have you managed to push through any kind of price increases? If yes, what is the quantum? Are you waiting for the coming quarter?
You see, quarter 2 generally for Bombay, because of the rains, is generally the worst quarter. You know, first half, how Bombay behaves is that 40% is in first half and 60% second half. But the way things are going, it is becoming more and more, consistent. And we believe that quarter 2 becoming equal to quarter 1 is something unheard of, at least historically. But that is how the trends are moving because the growth is across. In terms of price increase, we have a very stated policy that we take price increase twice. Once in April and once post Diwali. So we took the price increase post in the month of April, and if you see that we growing at almost 20-odd%, so 5% of that is driven by the price increase.
Okay.
So if you look at the price increase as compared to the quarter last year, we are trending at about 5% increase.
You also spoke about, several large infrastructure improvements that are happening in that Navi Mumbai area, right? Whether it's the Upper Thane area as well. In Panvel too, there's lots happening. Can you tell us what is the expansion plan that you would be looking at there, and what is the opportunity size as well?
Opportunity size is huge. See, for example, that is one segment where we have, of course, a lot of land parcel, and we can continue to build it for years and years. And in terms of as the infrastructure develops, the opportunity there is, say, for example, as people move towards the bigger units, the more township segments, one trend that is also visible for in Bombay market is that people have moved away from earlier 70 to 80% of the business used to happen from 3 to 5 kilometers of the segment. As the infrastructure improves, the consumers are ready to move to bigger amenities, better places, if it is even at a certain distance because of the infrastructure development. And as the infrastructure develops, we believe that customers from below, ahead of 5 kilometer and 7 kilometer segment also start moving. And that gives it's a huge momentum to the overall business. So next 2 to 3 years are going to be very, very exciting in this external segment, the Navi Mumbai segment, where all the infrastructure development is happening.
All right. You also have a facility management business which gives you annuity income. What's the current size of this? I believe that you want to scale this up closer to around that 400-500 crores by 2030. But in the near term, how do you see that scaling up?
No, we hope to reach that business by 400 to 500 crores by the end of this year. Out of the 14,500 crore guidance that we have given, we expect to deliver about 500 crore from that segment. And we believe that it will continue to grow. And by 2030, in next 7 years, we hope that it will increase at a much faster rate. And we hope to be about 2,500 crore business by that time.
All right, we'll leave it at that. Thanks a lot for joining in. We'll slip into a quick break. The market has fallen from the day's highs quite a bit, actually. The Nifty Bank is down almost 0.5% from the day's highs. The Nifty has fallen from the day's highs as well. So not looking like a great start. Just look at that sudden slide in the last 10-15 minutes. In fact, on the other side of the break, Mitesh Thakkar will join in for some technical trades. Stay tuned. Welcome back to Bazaar. Well, let's get a quick handle on what's happening in the world of commodities. But before that, let's also talk about the technicals of the market, because the market has cooled off quite a bit. In fact, the Bank Nifty is down about 150 odd points. Mitesh is back with us. Mitesh, this is the pain point for the market, right? The Bank Nifty, it's down over 3% in the last 1 month, and now there's further pressure. Is that the law of the land now for the next few days? And what are the stocks that you're looking at?
The underperformance, the Bank Nifty has not been able to reverse it. We did get a couple of days of, signals on the intraday chart that it could try and attempt to reverse this underperformance. But I think the Bank Nifty is heading towards 43, 400, 500 zone. Very strong support area. But if that breaks, then I would really want to go aggressive on the short side of the Bank Nifty and even banking stocks. So for the timing, while we haven't been trading the Bank Nifty, I think the outperformance will come from the Nifty IT. So that's where the focus should be, and Nifty metals to a certain extent. I think metals are buzzing today. I have, in fact, one stock each from the sector. Sale is a buy for me with a stop below 91 for targets of 100. And Tech Mahindra, I think that's also looking stronger. It's a conditional buy. Wait for the stock to start trading above levels of 1220. Buy then with a stop at about 1206 and target of around 1250 can be.
All right, thanks a lot, Mitesh, for that. Well, let's go across to Manisha Gupta. She's going to talk about the commodity markets now. Manisha, what are you looking at?
Well, there are just two things to watch out for, Sonia. One is monsoon, another is crude oil prices. So crude is what I'm looking at right now. We're trading at around 3-week highs and very close to 9-month highs as well in the international markets there. $87 and above is what we are trading at. And if it goes to 88, then we are at a 9-month highs in case of the Brent crude prices there. It's a 6th straight day of trade and we are headed for a weekly gain as well. But prices are up 5% in this week. And for the month of August, it's the last day of the month. We are up by nearly 6% right now. Of course, we have a couple of time zones to go. And more importantly, you have the US non-farm payroll data coming in today. And the markets will take cues from that as well. As of now, the latest reason for support really is the kind of rhetoric that we've seen from the OPEC and allies. Saudi Arabia, for one, says that they would roll out the 1 million barrel per day cut for a 3rd straight month in the month of October as well. Russia has been saying a similar thing as well. They have not given a quantum of what their cuts are going to be, but this is what has been supportive. It clearly has been about OPEC and allies, the kind of gains that you have seen for the month of August, the output cuts, the kind of rhetoric that they have been putting out in sense of supply and demand has been supportive. Also supportive has been the US crude stocks, which we have seen decline by 10.6 million barrels versus an estimate of 3.3 million. The markets also are looking at the US dollar index, which is down by 0.5% in this week. It also is about the weak US economic data and the expectation that the US may not hike interest rates going forward for the month of September. China, the numbers that have come in today, the Capex PMI numbers are at 51, which is much better. And with this, you've seen rise in output costs, inputs, new employment numbers coming in and factory activity as well. So that has been supportive. There have been concerns clearly from Chinese demand. So with those numbers coming in and with the kind of China stimulus measures that we have seen, China Bank also suggested that they would be unblocking a lot of restrictions when it comes to private companies, and that could take the prices higher. As I said, it's all going to be about the US non-farm payroll data today. And before we start with the weekend, it could be quite choppy when we see those numbers.
Okay, thanks a lot, Manisha, for that. Well, let's take a quick break. On the other side, our special segment, Indianomics, Lata will get chatting with a host of experts to discuss the Q1 GDP print, which comes in at 7.8%. Stay tuned.